Okay, we are live. Welcome to this webinar where we'll discuss the upcoming US election, its impact on global markets, and how you could potentially benefit from the opportunities this event may present. My name is Sam, and I'll be your host for this discussion. Alongside me today, I'm joined by two market experts, Alejandro Zambrano and Joe Neighbour. Thank you for joining me, guys.
Thanks for having us.
Thanks for having us.
So, to give you some background on our guests, Alejandro is our Chief Market Strategist at ThinkMarkets, bringing over 15 years of experience in the financial markets. He has also held roles at leading firms and is a highly regarded speaker and educator, having developed programs for thousands and hosted seminars around the globe. We also have Joe, the head of retail at Acuity Trading, with 20 years of experience in financial markets. Joe has worked as a broker, sales trader, portfolio manager, and research analyst. He is also a chartered wealth manager with the CISI and a member of the Society of Technical Analysis. So we couldn't have asked for two more experienced experts to help us navigate this upcoming event. Now, before we dive into the discussion, I'd like to share that we have an exclusive incentive for everyone attending the webinar today. So make sure you stay with us until the end and ask a question to either Alejandro or Joe for a chance to win a prize. Okay, so now that we've covered that, let's jump into the discussion. So first off, let's begin by discussing Trump's proposed policies and their potential impact on the markets. Alejandro, let's go to you first.
All right. Yeah, so it's obviously going to be an interesting event. I watched a couple of elections throughout my 15 years. In fact, I started trading in 2006, so it's been even more than that. So it's going to be a very volatile and interesting event. And a lot of people going to potentially, whatever they make throughout the whole year could potentially be made in a short period of time. But also, of course, money can be lost very quickly. And I wanted to maybe start here with saying, so Trump, of course, he's looking to reduce corporate tax rates from 21 to about 15%. And he's also looking to cut taxes, other type of taxes. And the main purpose there is to boost consumption and investment and spending in general. In other words, he wants the US economy to grow faster. He wants to sort of grow the pie. He's also keen on introducing tariffs. And that's going to be the tricky part of this equation. But if we look at the first leg, if he indeed goes ahead, cuts taxes, makes the US government smaller, then it could be a very interesting situation for S&P 500 firms and the US economy in general, because again, the aim is to make the pie stronger. And that's why we've been seeing, for example, the S&P 500 pushing higher. That's why as well, recently we've seen the dollar still gaining, is because the market is adjusting itself for a potential Trump win. Now, the challenge comes maybe further down, let's say, I don't know, months after this has been introduced. If, for example, the economy overheats and it forces the Fed to keep rates higher for longer, because as we know right now, they're looking to cut rates. And yeah, so that's sort of some of the ideas. The other bit, of course, with tariffs, which is a bit of a challenge, is that if we look back what happened during the Great Depression in the 1930s, they actually added tariffs about 10 to 20% across the board on thousands of products. And that's something that Trump has promised to do as well. Now, what happened back last time is that the markets declined with about 89% on the basis of these tariffs introduced back then. And what was interesting back then is that a lot of the countries that the US was trading with, like Canada, UK, France, they decided to put retaliatory tariffs. So that's, I think, is going to be something we need to watch, because it's very likely, I think, that if Trump would go ahead and introduce tariffs on absolutely everything, that other countries are going to do the same. And I'm not sure if you're aware, but global trade dropped with 65% following the introduction of these tariffs in the 1930s. I don't know, Joe, what's your thoughts on this? And we already covered the S&P. What do you think about maybe the euro and gold in these scenarios?
So, I mean, obviously, you make some great points there, Alejandro. I mean, with regards to the tax cut, we saw one fairly recently, the Tax Cut and Jobs Act in 2017, and S&P 500 firms experienced obviously notable rises in profits. I think, according to Goldman Sachs, a report I read, that these proposed tax cuts by Trump could potentially increase earnings per share by approximately 4% across the board, which of course would be pretty good news for all of the corporates in America. But these tariffs, of course, we need some further clarification around that, and that's obviously going to impact certain areas potentially. Companies like Walmart or Target, which are heavily reliant upon these imports, may face higher costs as a result of this. And notably as well, some of the tech firms perhaps as well who manufacture products overseas, such as Apple, they could potentially be impacted too. But in terms of how it could affect euro, dollar, and gold, I guess these are the assets that typically traders on this webinar today are possibly looking with more interest at. As we know, gold is soaring at the moment. If the stock market becomes more buoyant as a result of the decrease in taxes, then potentially investors might start chasing stocks, and therefore that might mean that they start liquidating perhaps gold positions, because we know that anybody that's been long of gold for the last few months is probably sitting in some nice profits. So potentially it could have an impact on gold negatively. However, we do see generally an inverse relationship between stocks and gold, but that hasn't been the case. Both really have been trading as risk-on assets over the past few months. And the reduction of corporate taxes as well is likely to strengthen the US economy. So for something like euro dollar, I would expect that to weaken because the dollar would gain in strength. How about you, Alejandro? What do you see happening?
Yeah, I'm looking at the same, like in particular in case, say euro dollar and in gold, as you mentioned. So if you boost economic activity at the same time, if you do go ahead and introduce higher tariffs, that will increase inflation because now American citizens would be forced to buy domestic products that might be better, but are probably going to be a bit more costlier. So that drives inflation, and that in effect forces the Fed to keep interest rates at elevated levels. And I saw some bank reports that project that Euro USD could be at 0.95 by the end of next year, and that's quite a steep decline. Now he's also looking to introduce sort of migration is sort of a key thing on his mind, and he sort of called for mass deportation involving the National Guard and the police. And what's your take on that? Like from a trader's perspective, what's the play there?
Well, I mean, if he goes ahead and puts in some of the measures that he's talking about, then I think it could disrupt labour markets quite substantially. And obviously, every month we follow the all-important non-farm payrolls because it's generally a very volatile event. And obviously, that will start to be impacted, as well as some of the other jobs indicators that we look at specifically. In terms of sectors that are reliant on immigration, you would be looking perhaps at the agricultural sectors, or even maybe the construction sectors, and possibly even hospitality, some of these jobs that are generally taken up by immigrant workers. So there could be quite a severe disruption perhaps to some of those key industries. So you'd be looking potentially at stocks like John Deere or Archer Daniels Midland, Marriott and Hilton Group. Potentially these big hotel chains could also be impacted and potentially face shortages in the labour market if he does go ahead and put these measures in place.
I agree. Also, something traders want to pay attention to. There's a stock called Geo, and they are in the business of providing facilities to ICE, which is the department that oversees deportations and asylum applications and so on in the US. They also have managed private prisons. And I think on top of my head, the out of the total market or sort of number of inmates in total, they are very, very small. And what's quite interesting is that the Biden administration has been reducing the reliance on these firms and not rolling over contracts. And what's interesting is that last time Trump was president, the number of contracts awarded to GAO it was more than the total number of contracts awarded so far under Biden. So that's quite an interesting situation, because that stock, I think, was up with about 80% at one point this year, when just when we knew that Trump had survived the first assassination attempt. So that's also a play that I find interesting there from a trader's perspective.
I mean, it looks pretty nice technically as well, right? I was checking this out quite recently, and it's a really nice looking setup from a chart perspective. So perhaps one that some of the traders want to take a look at. I mean, it's already moved quite substantially, perhaps on the basis that maybe Trump is gaining more favorability or is ahead in some of the polls that are taking place. So yeah, that's definitely one that's interesting.
Yeah, for example, like a trader that strongly believes that Kamala Harris is going to win, this would be an opportunity to short sell and vice versa.
Quite a binary play, I guess, then, based on what you believe the outcome would be.
I agree. Now, before we jump into Harris and her plans for the economy, we also know that Trump wants to make adjustments to the Inflation Act, which includes bits that are related to renewable energy and the green economy. What stocks are you looking at there for that, and also maybe oil markets there, Joe?
Yeah, so I mean, first solar would be perhaps the obvious choice there to take a look at. I mean, he's going to be very supportive of cutting back regulations and drilling more effectively in order to produce more crude. So it could have wide range of impacts, I guess. I mean, looking at oil as a potential play there, obviously, if he's going to be generating or producing more oil, that would increase the supply to the market and potentially have a detrimental impact on the oil price itself. But then that could have other ancillary benefits to the economy, because perhaps energy prices would be lower for households, then potentially creating more disposable income. But again, that potentially adds inflationary pressures. So the obvious stocks to look at from an oil perspective would be the Exxon Mobils, the Chevrons of this world. They are likely to be beneficiaries if Trump is elected.
Yeah. Also, like, it would be interesting to see what happens. Like right now, obviously Trump and Elon Musk are best friends. But on top of my head, I think for every electric car that they sell in the US, the buyers get a $7,500 tax credit, and that is at risks as well. But I'm guessing that they're gonna be looking after each other. But that's also something to be aware of as we head into the election.
Yeah, absolutely. I mean, he also faces potential regulatory issues as well, potential legal challenges by doing all of this, which could potentially create even more volatility in the oil markets. So
Oh, yeah,
potential opportunities for traders out there.
definitely. How about Harris then? I mean, the way I look at it, she's looking, obviously, they want to keep on growing. I mean, the economy has been growing, it's doing remarkably well, given how high interest rates are and how low inflation is right now. So I think they've done a good job, but obviously people always want more. And I think that maybe that's what's appealing with the pledges of Trump. Now, in her situation, it looks like she's going for more of a targeted approach over Trump's sort of bazooka style. And from a trader's perspective, I mean, something that stands out is like the housing market, building 3 million affordable homes, and offering a 25K down payment for first-time buyers. What's the play here if we wanted to bet on this outcome? Which stocks should we look at? And yeah.
Yeah, there's a few. I mean, I think if Harris were to win, I think the outcomes potentially would be more predictable for a trader as opposed to Trump, because I mean, I think both of them have been a bit kind of fluffy in terms of policies. So, things are, there is potential for change there. But based on the policies that Harris has put forward, I think, potentially a lot more straightforward for us to look at, and maybe target some specific stocks in different sectors. The house building one, of course, is a very interesting one. If you're building 3 million affordable homes, those contracts are going to have to go to house building companies. The likes of Lena Corporation would, of course, be maybe one of the larger. Other firms like DR Horton could be another one potentially to look at as well. Both of which could easily benefit from an increase in housing demand. But not only that as well, if people are buying first-time homes, they might need doing up and fixing, and therefore that brings into play companies like Home Depot or Lowe's, who both would potentially benefit from these policies from Harris.
Yeah, I agree. Now, something that I didn't see so much about it anymore, but I think something that worried people was the idea of taxing unrealized gains. Now, I think it hasn't been talked about or mentioned so much recently. Have you seen anything about that? Because obviously, if they will go ahead with that, I think it could have a big impact on sort of the driving engine in the US, because what they're famous for is that you can have a wild idea like I want to colonize Mars, and then you'll actually get money for that. Like if you tell that to someone in the UK, that wouldn't work at all. I mean, a lot of our firms, well, UK firms, and they'd rather list in the US. Um, have you seen anything about that? How could that impact if that would be a reality, become a reality?
Yeah, I haven't seen too much. I mean, I've heard obviously rumors, as I'm sure you have, but I'm not entirely sure really what the outcome would be. I mean, I think there would be obviously a cutoff point where this would be put into law, and therefore there could be some positioning that happens, potentially some profit taking. If you look at where the American economy is and how the markets have performed, there are a lot of people out there who have made a lot of money in the financial markets, and they may be looking to liquidate some of those positions, effectively restart them. And therefore, there would be less gains to potentially be taxed on that basis. So they could create certainly some volatility if that were to be brought in. I mean, I don't think it's any secret that Harris is proposing that there could be some increased taxes for the top 0.1%, who would pay additional rates of tax annually. And of course, that could create some potential opportunities as well, particularly in the consumer spending sector. So Walmart, Target, if there's more disposable income for the lower income families, then potentially there could be some uplift there.
Yeah, I think that's what she wants to do. She wants to sort of whatever wealth is generated, spread that out more equally, which in the long run obviously does. I do think is helpful. Like if you look at other countries where like the difference between the very rich and the very poor is very wide, you do end up with social unrest and other type of problems. Just look at countries in South America, for example. So I do see the benefits of there, but I guess obviously that's a long-term play rather than a short-term thing.
Yeah, I mean, I don't see Trump doing anything really to narrow the wealth gap in the US. He's going to continue to, favor his capitalist approach, and potentially, if he does get voted in 4 years' time, it could be, serious unrest that he's facing. I mean, he's obviously deeply unpopular in certain parts, but wildly popular in others. So, it's not only a huge gap in terms of wealth, but also in terms of who people favor to run their country.
Yeah. How are we doing with time, Sam?
We're good. We're good. Perhaps it's a good time to move on to Signal Center, Joe. So if you could, inform our listeners on how Signal Center can help them seize potential opportunities during the US election. So yeah,
Absolutely.
Go ahead and tell us some more.
Thank you. So I was previously the owner of Signal Center before it was acquired by Acuity Trading, and I've been working with that company since 2016. And essentially, it's a tool that is available to all traders at ThinkMarkets. You'll be able to find it on the mobile app. And within your customer portal area. Now, essentially, it's just a selection of analysis that we create every single day on a wide range of markets. We've got a pretty good track record at performing and outperforming generally markets in general for traders. And the idea of the tool essentially is just to guide you and help you along your way. Now, there's various ways you can use the tools. They are creating very clear entry and exit levels on all of the main markets that I'm sure you're watching on a daily basis. Every single trade idea that we produce has a risk reward ratio of 2 to 1 or better. So we're always looking for decent outcomes that are much higher than the risk that you're taking. All of the trade ideas are also intraday. So it means that you can kind of reduce your exposure, perhaps not take any positions overnight. And obviously with these upcoming elections, that may be something that's suitable for traders because they won't necessarily be involved in the markets as and when the announcements come about the results. Obviously, if you like risk and you would prefer to be in the markets around those times, then that's completely up to you. But this tool is there for everybody. You can use it to help guide you. You can use it to help validate your own trading ideas. Or if you're lacking any inspiration, perhaps use it as a guide for where you can get in and out of the markets that most interest you. So that's a little bit of a spill there, I suppose, on Signal Center, and hopefully that's useful. Hopefully there's people on this call that have used it previously. Feel free to ask any questions about the tool if you have any, and we can address those at the end.
Great, thank you, Joe. So we know the election will likely bring opportunities, but it's also expected to increase volatility. How do you guys think traders should manage their risk during this period?
I think if I may start, so obviously it's a bit tricky. Some people will obviously have position in the market before the exit polls. The problem with the US election is that when you start to get exit polls from one part of the country, other parts of the country are still voting. And sometimes it takes time for the markets or for people that are managing the election to count all the votes. But one would have expect that as data starts to come in on who is the winner, that the market would sort of either move swiftly upwards or downwards. And many times it will go up and down and then push up again before it stabilized. I think actually last time, if I remember correctly, we had one outcome, but by the time I woke up, because I was based in London, it had changed, so the market had gyrated. So we need to be mindful with that. Now, the interesting bit is that if you're trading liquid markets like gold or Euro USD, markets that do not close, then you could potentially get some really good risk to reward ratios when you're taking positions before the outcome. Now, in regards of stocks that we mentioned here, there you need to be really careful because the markets are most likely to gap. So when the stocks open the day afterwards, obviously, if you're trading things like that are traded overnight, that might lessen something. But many times when you trade stocks, there's going to be a gap. So, for example, you need to be ready that your stock can be up with 10 or down with 10%. And if you're looking at something like Geo, if it's up or down with 20%, wouldn't surprise me. So I think that's something to bear in mind. And Joe, you've been a trader for many years. When volatility is higher, what's sort of the best ways of reining in risk at that point? How would you manage that?
Well, I think there's a few ways. I mean, I think the most important one that I would say to traders on this video today is that you need to prepare for various scenarios. So I think if you are going to trade over this period, you need to have a very clear plan of what it is you're looking to achieve. Where are the opportunities going to exist for you? If you are trading based on emotion, or if you're trading based on what you're hearing coming out from the news streams at various times throughout the process, then you may be more fallible to making serious mistakes, which could cost you. So I think if by having a very clear plan, if you've got a preferred outcome, or if you believe a certain outcome is going to play out, then try and set yourself up according to that plan, rather than just trading based on the initial reactions. As Alejandro said, we can see pretty violent swings in price. In my career, I've seen a few of them. I'm not sure if you guys remember or were around when the Brexit vote came, but it was a surprise that we exited the Eurozone. The initial move was heavily down in the stock market before an absolute monster of a rally. So there could be some significant movements. One other way to combat that, and it might sound boring, but I think it would be very helpful for many traders to do this, is just simply to reduce your position sizes. If you typically trade a one lot or a half lot, whatever it may be on a certain asset, if you scale that back, there is still going to be plenty of volatility in the market, which means you can make still large gains and large losses, of course, with smaller position sizes. So just simple things like that, I think will be very helpful when the time comes.
So also I wanted to ask you, so are you guys changing any way you guys work? Like, or is it like a normal day on the election? Because I'm guessing maybe after the day after we'll have some nice established trends that I'm guessing you guys would, because you're mainly trend following, right? So I guess you would try to show us how we can enter those trends. Or how would that work?
Absolutely. So one of the key things that our analysts use on a daily basis is the average true range. And obviously up until the period of the election, we are probably going to start seeing some bigger swings in markets, and therefore we will try and position ourselves accordingly based on the expected ranges that we anticipate from the market. If we wake up on the morning afterwards and something's just moved up in a complete straight line, then obviously we need to try and adjust our positions even further on that basis. Do we want to jump in on the rally? Is there, have we broken through key resistance levels, and is there potential for it to move up to another resistance level above? Typically, we like to buy on dips if we're trend following, but also our analysts will look for counter trend opportunities if they feel a move is likely to become exhausted at a certain point, particularly if that's into major resistance levels or major support zones. So it will be adjusted accordingly, and we will do our best to try and produce analysis that traders can follow without taking on crazy risks or jumping into trades just because they've already moved in a certain direction.
Yeah, that makes a lot of sense. We also have, of course, the trailing stop loss, and it's an old tool. It's been around for a long time, and ThinkMarkets actually added it to ThinkTrader Web. If anyone is not aware of it, imagine you put a stop loss at a certain level, then when the market moves in your favor, the stop loss would follow along. What's your experience of this trading stop loss, Joe?
Well, I'm a big fan. Obviously, from a risk management perspective, I would urge everybody to have a stop loss on their trade. I know and have seen many traders fail spectacularly by not having a stop loss. Ultimately, it only takes one trade for you to lose all of your capital. So a stop loss is an essential piece of software or kit that everybody should be using. A trading stop loss, I think, can be very useful, particularly if you're getting markets that are moving up in one direction. Any kind of jinx back, you're going to get cut out and you're going to secure your profits. So big fan of a trading stop loss, and I think it's a very good addition from ThinkMarkets, and hopefully the traders will make good use of it.
Yeah. I want to add though, like if you're considering it, something to bear in mind, like you need to look into the volatility of the asset in question. For example, if one would say, oh, I'm going to buy Euro USD, and then I put a stop loss of trailing stop loss of 30 pips, then we need to understand, okay, if this is a short-term trade where you may be looking to capture, I don't know, 60 pips, then maybe it could make sense. But at the same time, say, for example, that you want to hold a position for a couple of days, a couple of weeks, and the average range in Euro USD is usually around 60, 70 pip. Then obviously, if you have a 30 pip stop loss, you're looking at least sort of a 50% probability that you're going to be stopped out within 24 hours. So that's something to bear in mind when using these trailing stop loss orders.
So are they configurable, Alejandro? You can change the steps and everything like that?
The way it works is that when you open the position, then you would click on trailing stop loss, and then you just choose the pips that you want. And that's going to be based on whatever the market price is. So for example, Euro USD is at, say it's at 108, then it will be at 107.70 if I have a 30 pip stop loss. And then as the market moves in your favor, that stop loss is reduced on that buy position. And it is something that it's interesting because it would allow you to step away from the trade to some extent and let the market sort of show you how far it wants to go. For example, a trading stop loss in gold, if you would have bought gold, a couple of months ago or last year really, could potentially have worked. And the tricky part is, of course, that sometimes you have a market sort of it goes upwards, and then you have a big slide, and then it just resumes. Because as we know, like a typical trend doesn't necessarily it doesn't just goes up and then straight down. It goes up and then strong down, and then it continues to move higher up. So the trend continues. It's just that it doesn't continue with the same intensity, and that's sometimes where you get a bit in trouble with the trailing stop loss.
It can obviously lead to huge gains as well, though, right? So if you don't have a take profit level, for instance, and a market just runs and runs and runs, as we've seen with gold, and you have your stop loss, far enough away that it's not going to be affected too much by these pullbacks, then potentially you could return multiples of what you've risked on a particular trade, and also it removes the emotion from it as well, right? Because as you say, you can step away from the screen, and if you can catch a mega trend in something, then you potentially could earn a small fortune from doing that.
Yeah, no, definitely. There are obviously all these. I think when it comes down to trading and investing in general, you try to use like a more of a scientific approach is usually good. Because a lot of new traders, like, they beat themselves up like, oh, why didn't I stick with that trend or trade, right? Or like, oh, I should have closed out too early. And it's like a repetition there, and people feel bad about it. But I think when we are approaching trading and the different tools available to us, I think we need to try to, figure out the methods that gives us sort of the best in the long run, the best on average, like sort of, because say on a normal year, you might trade, 100 times, right? So what's the blueprint to make the best out of all these individual 100 trades? So by the end of the year, I sort of didn't cut positions too early, and so I got out with the most type of profit versus the lowest amount of risk, and trying to balance that. Yeah.
Okay, great. So thank you very much for the valuable insights. Now I think is a good time to answer some questions from our audience. So if you do have any questions for Alejandro or Joe, please drop them in the chat now. I can see already we do have some, so let's go ahead and get those answered for you. Okay, so the first one we have, how might Trump's government affect Tesla stock and the US dollar?
Alejandro, or should I go first? I mean, we've obviously touched upon this a little. We know that Trump is going to favor, natural resources. He's going to, get the drilling rigs up and running and try and produce or turn America into one of the top producing oil nations. And that is obviously against, where the rest of the world may be moving towards, which is more of a transition towards cleaner energy. Obviously, Tesla is a huge behemoth of a company that is reliant on us moving more towards an electrical future. And it remains to be seen whether Trump is going to support that. They seem to have struck up some sort of friendship through the socials that we're seeing them interact between. So, yeah, and obviously Alejandro has already mentioned this tax benefit that is on offer. Will Trump scrap that, or will he continue? What do you think, Alejandro?
I think he's gonna scrap that. I think he said that many times. He's gonna scrap it, but maybe he will postpone any decisions specifically related to Tesla. So I think my gut feeling is he's not gonna try to hurt Trump Musk if he wins the election. So that might be deferred for a while, and then maybe they cut a special deal for him. So we also had the question about the dollar, and so this is a tricky part for Trump, because he doesn't seem to get it that if you have a very, very strong economy and very high interest rates, that your currency will be strong. Look at the opposite, Japan, very low growth, very low inflation, and very low interest rates, and your currency weakens, right? So it's gonna be, I definitely think the dollar could gain, and we're already seeing it right now, but he's gonna try to talk down the dollar. So you will occasionally have, big moves against you. I remember, for example, when he was president last time, I was holding on to gold. We had a very nice breakout. Everything was looking good. And then he said something like, "Oh, I'm going to talk with the Saudis. I'm going to get dollar prices down." And then, gold dropped maybe 5% or something like that, or for over a day or two. I got stopped out, and then the market recovered. So there's going to be a lot of verbal intervention. So you need to get back on Twitter and maybe Truth Social to be able to follow him. So we got another question here. Let me see here. How do you maintain your account when you get funded? Because most difficulties new trader faces is hoping to get an expert to explain how to stay funded for more than a year. So it's easy. Like if you fund your own account, just don't trade like crazy. Like the problem with trading in general is that it takes a bit of time to learn to master it. So whatever money you put into your account, see that as your sort of tuition fee. Okay. So whatever money you put, you see it as your tuition fee, you trade, because you in the beginning, if you're lucky, you'll have a bit of early success and beginner's luck, and you'll be able to produce some profits. But many times, like what happened in my case, for example, I made about 40% when I started trading when I was like a student. I was super happy. I thought, oh, I don't have to get a regular job. I'll just be trading. But then afterwards, I think for like a year or so, I was struggling to finding the right balance. So the trick there is just don't trade too aggressively in the beginning. And then when you have found a system that works, you can put more and more money. Like what I'm trading with now is like, 100 times more than the account I had when I started, when I was 20 years old.
So is this question regarding a prop funded account? Am I right in saying that?
It could have been, but I went for it as if it was that normal Forex and
No, no,
CFD
and that's
account.
right. I mean, ultimately, you've got to treat it in exactly the same way. I mean, if you've already got a funded account, then you must have done something right initially to pass those challenges in order to get a funded account. So I think just
Yeah,
more of the same, right? If you already got to the point where you've made, I don't know, maybe 10% and then the follow-up
yeah,
5%, you've achieved that already. So you're doing something right there. So just try and refine that, I suppose. Maybe risk less of your positions. And obviously these have very strict rules that you have to follow. So just try and adjust your strategy around that to make sure that you don't ever have perhaps more than 5 trades open, risking more than 5% at any one time. So you're never going to hit those, those markers that are going to get you closed out. So just work on that
yeah.
basis, I would say.
Yeah, and as well, don't forget to bank some of that profit, because obviously with ThinkMarkets, there's no restriction. It's you have your pile of money that you use, your chips sort of to work. And as long as you keep your balance, you keep your money, you can trade, right? And so that's what I would also suggest, because the issue with funding in general is that they do have these strict rules, you know. But obviously, if you're trading a 100 grand account and you make 20% on top of that, you get to keep a majority of that, and that's obviously great. But try to bank some of that, and then, because I think ultimately, yeah, okay, the funded trading is interesting, to get started. Like if you only have 500 bucks, yeah, okay, maybe you want to give it a try, right? But then ultimately, what you want to do is you want to have your own trading account with ThinkMarkets, because then you're your own boss. Like right now, technically, you're still working with a funded, with a prop firm, and they have their rules.
Yeah, that's fair. There's another interesting question about what is the best time to enter a trade on the day of the results announcement. Should they go pre or post news? I mean, this is really down to a question of risk, I think. I mean, if you are typically more interested in taking higher levels of risk, then you might want to perhaps take a position earlier to try and anticipate a movement as and when the results are announced. If you are less or if you're risk averse, then perhaps you want to wait for the result to actually play out and then pick your moments after that. Of course, you run the risk of having missed some potentially huge moves, but it ultimately, I think, will be the safer play to do it after. That would probably be how I go about doing it anyway.
Yeah, what you can do is like sort of, it depends on your conviction as well. Like some people like are convinced that one of them are gonna win. And then obviously you probably more convinced to take higher risks. But then as Joe says, like afterwards, what's gonna happen is that you're gonna have a big move, either up or down, and then that whatever that trend is, it will persist, usually persist up until January, until whoever is gonna be the next president becomes the next president. The inauguration ceremony, that's usually when the market has priced in whatever all these pledges. So you do have a couple of months there of trading. You have a decent trend that you can work with. So we got a question that is related to prop trading. So it's really important to understand that ThinkMarkets is not a prop trading firm, but they do supply prop trading firms with their technology. So this question you have there depends on the prop firm that you are interested in. They have different rules and settings. So we got a question: how can traders integrate their trailing stop loss into their existing trading strategies? Joe?
So obviously we covered already a bit about the trading stop losses, but I think as with anything new, you need to give it a bit of a test run, right? You need to try and work out the parameters that best suit your approach to markets. If you're trading on 5-minute charts, 30-minute charts, daily charts, whatever it may be, you need to perhaps use something like the average true range, which will give you an idea of, on average, how much markets will move on a daily basis in pips. That can be a good starting point. So maybe you want to have your initial stop loss starting below or above the standard ranges that we see in the market, and then they can start ticking up from there. But I think, as with anything, as I mentioned, I would suggest doing some test runs, perhaps in a demo environment to begin with, before going live with your own cash.
Yeah. So let me see here. I think we've already done that. Currently, dollar is not top. Do you think if Trump comes, it's going to be on top for the next 5 years?
5 years is a long time in financial markets.
Especially in currencies. If you look at long-term valuations of the Euro USD, is neither the dollar is neither overbought or oversold. So it's not at an extreme level. Like if Euro USD would be at 0.8 or maybe at 0.20 or 0.30, we can talk about things being out of line with sort of long-term valuations like the ones the IMF uses. But last thing I checked is that we're not overly overbought or oversold. So it will realistically be around the same levels, maybe in a couple of years' time.
Yeah, I'd agree with that. I mean, I think as we already said, if Trump comes in, I think we both probably think that it will be positive for the dollar in the short term. How it and where it's situated in 5 years' time, I don't think I can make a call on that at the moment.
So we got a question here. How can traders differentiate between short-term trading opportunities and long-term investment strategies in the Forex market following the election, especially in light of potential rate cuts and their effects on the US dollar index? So I think the best thing there one can do is, you would potentially have two accounts where you split up the money, because at least psychologically, it's a bit weird to sort of see a long-term position losing money for a long time. or winning money for that matter. And then you have your sort of your short-term capital. But it doesn't have to be like any conflict there. Like if, for example, let's assume that Trump is going to win, and let's assume that the banks are right, okay, and that he indeed boosts GDP, and that indeed, interest is going to be higher for longer. Okay, then your USD might go to 0.95. So what I would do is that I would look at something like at least a daily, if not a weekly chart, and then I would look to say, okay, where are support and resistance on the weekly, and then take a position based on that with the target of 0.95, and then sort of leave that position there, sort of forget about it. And then you could jump into your short-term account where you would have your short-term strategies taking positions. Or, if you don't have a short-term strategy, but you still think the dollar is going to gain, then you can just look, what is Signal Center doing? Should I be buying dollars today? Yes or no? And when Signal Center says, okay, maybe you should be buying dollars, then you would employ that in that short-term account, because that's what they do, to do the short-term trading. So that's how I would go about that.
Well put, Alejandro.
Thank you. This is a good one. Do you see effect on crypto if Kamala Harris won, if she becomes the next president? What do you think, Joe?
I'm not entirely sure, to be honest. I haven't really followed up to see what her view is on crypto. I mean, clearly it's becoming more mainstream all the time. I believe Trump probably would be more supportive of cryptocurrency than perhaps Kamala, but I'm not entirely sure. So, I mean, it's obviously had a decent boost of late. What's your thoughts?
Yeah, I think she's looking to this. I think it was in a Bloomberg article. They're looking to replace the head of the SEC with someone more pro crypto. And as well, I think on October 14th, she published a document where they want to support Black men. And part of that is that they want to build a safe regulatory environment for crypto investments, because in another piece of statistics, about 20% of Black men in the US have invested in cryptocurrencies. So that came out, and that actually, on the day it came out, it helped Bitcoin to push higher with about 5%. So yeah, I think both are moving towards supporting crypto. So I think it could definitely be something you want to keep an eye on. Bitcoin and crypto itself, like Bitcoin is still stuck in a big range, but sort of if we start to clear those 70 highs or so, we can leave that range, and maybe we can have a resumption of the bull trend that's effectively been put on hold for the last 7 months.
Mm-hmm.
We got a question. How does market sentiment impact US election? Okay, how does US election sentiments impact Forex trading volumes?
Well, I think it's a good question, and it depends, how market participants are actually going to approach this. So, will the big banks maybe, stop taking positions or reduce their trading activities? If they're uncertain of the outcome, then quite possibly they will, or maybe they'll have some sort of mitigating strategies or hedge strategies over the event itself. I think the reason that we get these big spikes in volatility perhaps is because there is a lack of liquidity in the market. There is unwilling buyers and sellers out there, and that's what creates the spikes in both directions. So I definitely feel it will impact trading volumes, certainly in the run up to it. But then, as and when the results are announced, you might see a large increase in trading volumes.
That's right. So typically what happens just ahead of the election, it can sometimes get quite quiet because people are not willing to take risks. So what happens just before we're expecting the announcements is that if you have maybe 10 brokers, and all 10 brokers are streaming prices to a broker like ThinkMarkets, then maybe just hypothetically, maybe 5 of them go offline, or they're going to quote you the difference between the buy and the sell price is going to become wider. So you see widening spreads because of that. It's very typical as well if you look at things like non-farm payrolls and things like that. And then, depending on the outcome, they're going to price you differently. Because if we know now President Trump is going to be the next president, for example, or Kamala Harris wins, then they're going to be like, why am I going to sell you my euros at 110 when I think I should be selling them to you at a different price? So then you have these gaps. But then as more and more traders come in, because they'd be like, oh, but price was, it was a 110 now, it's not 108, and they think that's wrong, that valuation. More and more people come in, and then the spreads narrow again, and it's back to as usual. So we had another question here. How might the anticipated economic policies of the newly elected president influence the Federal Reserve's stance on interest rates? Yeah, so I think we covered this a few times. So realistically, if Kamala Harris goes ahead, there's anticipation that, so Trump introduced tax cuts many years ago when he was the president. They are supposed to sunset by the end of 2025. So by the end of next year, these old tax cuts are supposed to be wind down, which means that taxes would automatically increase in the US. So that means that suddenly people have less disposable income. So again, at that time as well, most likely the Fed would have lowered interest rates to where they want to have it. So maybe at that point, you'll have less economic growth. And, in that case as well, the Fed could cut rates even more, really, if that would happen.
Okay, guys. Unfortunately, that is all the time we have today for questions. Sorry if we didn't get to answer them all for you. I'd just like to say thank you, Alejandro and Joe, for your insightful answers. And as mentioned earlier, we have an incentive for those who did stay until the end and asked a question. So I'll now select the winner based on who asked the best question. And that person will receive $250 in trading credit with ThinkMarkets. However, it should be noted that because of regulatory constraints, the selected winner may not be eligible for the $250 credit due to their region, and an alternative prize will be offered. So without further ado, the winner is Noah Daniel. I hope I pronounced that correctly. Congratulations. We'll now send you a private message on Zoom to get your email address. So please stay on the call while we gather your email to send you more details about your prize.
Congratulations.
So, yes, so that is all we have time for today. Alejandro and Joe, thank you both for joining this webinar and providing your insights. We hope you've enjoyed the discussion, and if you're interested in trading the US election with ThinkMarkets, be sure to check out our US election page on our website. And don't forget to create a live account or log into your existing account to start preparing your trades for this event. So thank you from me and the guys, and goodbye.
Thanks, everyone.
Yeah, thank you so much. Thank you. Goodbye.
Bye-bye.